Welcome to Real Estate Investing for Life. I'm Jonna Weber, and I am joined today. We've got a special guest on the show, my friend Tamar Hermes, who's calling in from Austin, Texas. And we get the pleasure to speak more than just once a year. And part of our relationship over the years has been through masterminds, which is really fun. And that's part of what we're going to cover today. But the reason I wanted to have Tamar on is because she is brilliant in explaining a concept called finding your enough number. And this is something that's been resonating with me. I know it will resonate with you. She works with women from all over the world talking about this concept and what to do with it. So, welcome to the show, Tamar. I'm so glad to have you here.
Thanks, Jonna. It's always a pleasure to get to speak with you and your
It is.
audience.
I love it. I'm so glad. And it's a treat for people to get to know you. We did have a brief interview a year or so ago, and I'm just really excited to have you back because this is an important discussion. And for those of you that are just tuning in and hearing Tamar for the first time, I'll give you a little background. Tamar and I have known each other for we met during COVID. I remember we were coming out of COVID and we wound up at a retreat together down in Texas on the shores. And you spoke at that retreat and crunched a bunch of numbers out on some whiteboards. And it really got me thinking because for years I just, did some simple things, some definitely right things in real estate investing, but I wasn't really looking at the number and looking at the end game. And fast forward 5, 6 years, I am so passionate now on helping people figure out what that end game is and what's right for them, because a lot of people wake up, 5, 10, 15 years down the road and they were chasing the wrong thing or maybe overshooting, if that's a thing, right? So tell
100%.
me, tell me a little bit. I know you've written a book, The Millionaire's Mentality. You've had a successful podcast. You've shared with this a lot, but for my audience, if they haven't heard you, can you give me just a brief overview of how you came through your lens on helping people find their enough number?
Yeah. So, what an evolution, right? We're all on our journey. We're all looking to find our way. My story really began as a poor kid and really wondering, how do wealthy people get wealthy? How do people get into the world and have real estate and have money saved up and be able to live the lifestyle that they want? Because I grew up without resource and I had no idea how to do that. And my parents didn't know how to teach me that. And so I was always on this quest because I could see other people going on holidays and buying cute things and living in nice houses. And I, in my little apartment, would think, how is this possible for me? And I know I'm probably not the only one that's listening to this that can relate to that story. For me, I became so obsessed with how do people make money? How do they grow wealth? Which brought me into real estate, which brought me into, okay, now how do I keep my money? Which brought me into tax strategy, which brought me into how do I keep even more of that money and how do I make that money work even harder for me? And then I realized I was on the hamster wheel. I was on the wheel of, we just got to keep doing it. You got to keep the train moving. You got to keep making more. You got to keep going, going, going. And I'm sure the listeners are thinking, oh my gosh, I'm just stressed out because I can feel that all over my being and my body, that stress gets into our reality of living our life on the day to day. And that was when I started to think about how much is enough? How much is enough? And is
Right.
there an enough number? And so I started to really look at calculations and created a really simple formula that if you go to a financial advisor, they will give you a version of this. And generally, what they'll show you is the 4% rule base, which basically means if you work for another 30 years, then in 30 years, you can take 4% out of your savings and live for the rest of your life moderately, which really sounds exciting, I'm sure, to everyone. It sounded pretty horrific to me because I had already felt like being in a job was like a bit of a prison because I didn't feel like I had complete choice about my hours and my time. Granted, there's a lot of beautiful things to that structure. And I realize now that there were things about having a job as opposed to being an entrepreneur or investor and doing everything on my own, how one really does lend itself. So I'm definitely not knocking anyone that has a great W-2 position and loves it. But for me, I felt like, how do I make this enough concept work? And so I looked at the variables, which are time, inflation, and tax strategy. And those four levers are going to make all the difference in terms of how your money is working for you. Because at a certain point, you're going to have enough money where that money can cycle and keep working for you. And you can live the way you've always lived your entire life, going on your vacations and doing the things you want to do with your family and enjoying the home that you live in without having to sacrifice as you get older and feel like you have to be very on a budget and scrimping and saving, which is no fun. That we did not work our whole life
Right.
to do that. That was a
Right.
long answer, but it
No,
was
it's
it was a journey to enough.
yeah, for sure. And some people, I think a big problem is that a lot of people just have no clue. Like they're just working, they're just going on the treadmill and going over and over. Or we're also inundated by social media and all the influencers out there and all the concept of enough that you think it needs to be. Actually, for me, I know the thinking was it had to be more than it does. Not to digress at all, but I was starting to tell you before we recorded that I just listened to this podcast this morning that was Ed Milet and Gary Vee, and they were having a conversation. And one of the most impactful things I just heard was that so many people, they keep going and going and going when the majority of people, I mean, they can be great with $250,000 a year. And just to throw out a number on there where people can be comfortable. And if that's your enough number, that's okay. That's great. And we celebrate that. Not everybody has to reach and get to themselves to the level of the stress level that probably most likely comes with two, three, $4 million a year. And so
100%.
it's really calculating what your lifestyle is and what brings you joy.
A hundred
Uh,
percent. It's so important. And it's important to realize that there there is that number, and then there's also your goals, your dreams, your ambitions. And sometimes you want to surpass your enough number because maybe you want to give a lot to charity, or maybe you just love entrepreneurship or investment and you want to swing for the fences and play. It's just that you are playing a more risky game, right? Because the more we play, the more we're going to win and the more we're going to lose. So it's
right.
just a matter of how much you love the game. And it's a good question. And it's one where we need to take some time to assess, which is why I'm so passionate about supporting women inside of my mentorship about this enough number. And I always say that when we're building to the enough number, or if we've reached the enough number, that it's really important that we look at the layers inside of our psychology and mindset around money and our relationship to it. Because a lot of times we can get to enough, and what happens is that we're still not feeling completely satisfied. And part of that has to do with the fact that, one, we're still feeling underneath that money is finite, that it's a scarce commodity and we need to keep making more and more and more, even though rationally we know we're at enough, but there's still that psychology, that fear that we came from not having a lot of money, from having to work our whole life, from being conditioned that it needs to be hard. So we need to learn how to calibrate. And that's part of the work that I'm doing now, is to marry the two, to be tactical, but also to ask the questions about who we are, how we want to live, and to really feel complete about how enough can live with us and in our bodies and in our minds, so that we can show up joyfully and really live a full life, because it could just completely take us over even when we get there. How do I know that? Speaking from experience.
Well, and you and I are both have had many facets of successful careers, but also obviously we're both very much real estate investors. And that's mostly who's listening to the show or dipping their toes in real estate investing. So we always know that investors are always chasing the next deal. In your opinion, how does internalizing your enough number affect the way that one invests?
Well, I think there's a couple of variables. One is, we looked at the four factors, right? There's time, tax strategy, inflation, and taxes, right? So we've
Mhm.
got the variables. And when we look at time, we're also looking at how old are you? So if you're a 30-year-old and you are trying to make a couple a couple $1 million so that you can live the way that you want to ultimately live without having
Right.
to work as hard, you might be a little more aggressive because maybe you don't want to wait on that clock. That might mean that you might take on a bigger project like a storage unit or a multifamily, or you'll buy several single family homes, right? But if you're
Right.
someone who loves your W 2 position and you have a great position, you love your life, you're happy, maybe you're just buying single family homes because it's a lot easier, in my estimation, to in my experience, to do a single family home where there's less risk, there's less money involved, and you just take singles and doubles over and over. And over time, you'll end up in a wonderful place.
Right. You can see why I had Tamar on the show because we're so aligned in that. There's no generic advice that's one size fits all for everybody. And that's what one thing I really appreciate you is that you work really deeply with folks to help them understand their personal scenarios, what their risk tolerance is, and what's going to work for them. I sense that you work with the high income earners. They're busy, right? So how do you work with women in particular? I know that's your specialty to get them to actually take action through that process. Do many people actually wind up taking action and getting involved in some investments when they're working with you?
100%. I think that part of what we're doing is evaluating which investment strategy is best for you. So it might be real estate, and some of my clients are high income W 2 earners, or their businesses are making a ton of money. They don't necessarily need to do real estate because we introduce other investment strategies that will save them on taxes, that will move their money around so that they feel comfortable, so they don't need to necessarily work, create another job for themselves, right? Because let's face it, real
Yeah.
estate investing is a project. It's not something that is completely passive. You can do it passively. And, I say this from experience, which is that when you turn your money over to a third party, you have to ask yourself, do they have the same risk tolerance as you? Do they have the same way that they evaluate numbers? Do they have the same thought process in terms of evaluating risk? And what I found is that there are many variables that can make or break a deal. And that if you're not completely aligned, you may end up falling short and your investment could go to zero. And so I'm very cautious these days about passive investing because I think that for a while it was all the rage and people would
Mhm.
say, just give me your money. I'll make you a ton of money. And sometimes it works beautifully, and oftentimes it doesn't. So for me, I do have certain deals and partners that I do work with inside of my mentorship, but I also caution all of my clients and anyone that comes into my space. I do work with men sometimes too, so I'm not anti-men. I've been married for 25 years, so I do like men too. But what I'm always cautious about is how effective can you be when you're in control of your money? And,
Right.
there's definitely been times where I thought, a few $100,000 that got lost on a couple deals. I think, wow, a great ETF, S&P 500, would have still made me 8 to 10% over time. And that looks very good now that my dollars have
Right.
gone to zero. So I'm not saying I'm not poo-pooing all passive investing, but I am saying that you need to understand that when someone presents you with a project, they're going
Mhm.
to present it to you in a way that feels like it's better than anything you've ever seen in your life
Mhm.
because
Mhm.
they want you to be on their team. They want you to be an
Right.
investor with them so that they
Right.
can execute their project. And I'm just saying, just proceed with caution and at least know enough to analyze every single aspect, including the contracts. Every single aspect of that deal needs to be scrutinized because the road to hell was paved with good intentions, my friends.
Right.
So that is that was my little rant on what it is when you are trusting others to manage deals for you. And like I said, there's a time and a place. There are certainly opportunities where it works. There are guardrails that we put up inside the mentorship that I'm very cautious about, making sure that my clients understand the variables. And that's what I want the listeners to know too, because I may have saved several of the listeners a lot of money where they were thinking, Jim down the street had a great deal and he wants me to do his deal, but I don't
Mhm.
totally understand when he says this dollar is going to add up to this dollar and this dollar is going to add up to this dollar. And if you don't
Yeah.
understand that, it's not that Jim's a bad investor. He
Right.
might be, but it does mean that you might analyze deals differently. And that's something
Right.
really important to look at.
It is really important and more important than ever. You've got major personalities, I will say, that are out there all over, that are kind of speaking out of both sides of their mouth. And another thing that people need to be cognizant of, again, just what you said, what is that person representing? I know folks like yourself, folks like myself, we're just so passionate about representing the person and making sure that they have the knowledge needed to go forward in good faith. And you need to look at everyone through that lens to make sure they're just not there representing the deal. It's kind of like, as a realtor, I think about it's kind of like going straight to the listing agent and trying to get a deal, but really that listing agent is representing the seller. They're representing the deal itself. They're not necessarily putting your best interests first and foremost. Not to say they're not great people, but I think the more educated and through that educated lens people can look, the better off they're going to be.
Absolutely. And that's the other thing, for both men and women to begin to attune to what is your enough? What do you understand about real estate investing? What do you understand about the risks? And what you want to be looking for is what can go wrong in the deal, not everything that can go right. Because most of
Right.
the time, you're not going to be looking at what can go wrong. You're looking at all the excitement of making 100K on a flip and buying a property that's going to make you a lot of money, or giving Jim, again, I don't know why I'm picking on Jim, but
Poor Jim.
giving Jim, 100K and thinking it's going to turn into 200K.
Yeah.
And so these variables are really important because let's face it, we work hard for our money and it's
Right.
disappointing to lose money. And it's also part of being in the world and losing that attachment to just clinging to what we know, right? Because when we're only clinging to what we know, we're not going to be great investors either, right? Because there's going to be variables that, regardless whether we're controlling it or someone else is controlling the deal, there's going to be variables that we cannot understand. And what we're trying to do when we are a real estate investor is mitigate the risk. We're going to say, okay, well, that wall may need to come out, which may cost me 20K, but it may not. But I'm going to plan that maybe that wall needs to come out. So I'm going to budget for 20K.
Yeah. I love that. And the more equipped everyone feels, the more they're apt to actually take action and get the ball rolling. And that's always a good thing as long as it's a solid investment. Let's jump into the idea of community. We both have community in common. You run community, you run mentorships with other women. I have personally been to a couple of your retreats, which are fabulous. As you know, I run the Idaho Real Estate Investor Network community. I'm very passionate about bringing good people together. What do you think from an investing standpoint is the biggest benefit is of learning real estate investing and being involved with community that's in that kind of space?
Well, when we can share honestly and we have a safe space with people that we trust, there's an opportunity for us to really work out the variables. Like I said, with real estate investing, we have certain variables we can't control. But, maybe I'm sharing a deal with Jonna, and then Jonna says, Tamar, have you thought about this aspect? Or have you realized that this loan is not fixed for 30 years? It's only for 5 years. So then it could go into a variable rate, which could really hike up your payments. There's all kinds of variables. And so when we're in community, it gives us an opportunity to look at those. Granted, when I'm in my mentorship, I'm steering the ship as the captain, and the women that are inside of the community are quite brilliant, just like you've been part of my community, Jonna. So you know that the women are all super intelligent, high achieving.
Mhm.
And so we bring certain distinctions and ideas to each facet of what that deal could look like and what the opportunities are.
Right. Oh, it's so powerful. I mean, that's why I started my own community because I missed having that, having been part of a lot in the past. And there's something, whether it's something formalized or not, just having some people to bounce things off of in general, too. Plus the inspiration on how to live holistically, not just about the deal, but just in general. When you have a community rooting each other on, I think it's powerful. And I think some of my most powerful like breakthroughs have been through those sorts of environments over the last several years. And a couple of those were in Austin with you. So I love it. Now you bringing together a community and what you're doing now, is it virtual? Can people join and work with you from wherever?
Yes, it is national and it is in, and we do meet on Zoom calls, and there's a lot of support. And what I'm doing now is more structured than it ever has been, because what I have found is that when there isn't a lot of structure, then it's harder to execute. So now we go step by step by step. We look at the enough number. We understand what your investing profile is, where your opportunities are, and what path you want to go on. I always find that when I start with any client, I'll always do 90-minute privates, and I do these 90-minute sessions with anyone, men, women. I do them frequently where I'll really look at the entire portfolio and help to analyze where the opportunities are, what tax advantages there are, what money is sitting idle, and whether we want that sitting idle, where money could go, how's the CPA doing. All of these variables are a piece of the financial puzzle, and they create chaos in our mind because there's a lot of variables, especially when you own several properties and there's LLCs and there's property taxes and there's all kinds of I's that need to be dotted and T's that need to be crossed.
Yes, yes. And the women that work with you primarily, do they need to be I'm thinking they can be just successful folks in general that are dipping their toes in real estate investing. Is that correct? Or do they need to be experienced?
Most of the women that I work with either own their own home and maybe one or two properties. Sometimes they have a small portfolio. Sometimes they just don't have any property, but they're making great money in their business and they know that they want to create additional income streams. Or maybe they're a high income W-2 earner and they realize, oh my gosh, half of my paycheck is going to the IRS, and we have nothing against paying taxes if
Well, some of
we
us do.
are if we're utilizing the tax codes properly
Right,
and we're
right.
doing the things because really the tax incentives generally are designed to support industry and to create the economy to flourish. That's why there's incentives for real estate, because we need houses, people need a place to live. And there are incentives for oil and gas because we need those commodities in order to fuel a lot of the resource that we use in our world. So there's different opportunities and different ways in which we can utilize the ways to grow wealth. So I would say that really the prerequisite for the women that work with me are women that are just or earning well, that just need help to know, how do I make my money work harder for me? How do I know that I'm building this right? How am I protecting my assets? How is my legacy going to work? Answering all these questions and really getting into, how do I know what my enough number is? And how do I embody the identity of a woman who has that enough number or
Oh,
who's
I
working
love that.
toward it?
Yes, it was so wonderful when I was in going through the calls and the basically the program myself and learning those answers, which has really freed me up in my decision making for my investments going forward, but also just the proximity of the others that are in the community. And I recall now there's people that own distilleries and people that were successful medical practices and those that are doing short-term rentals. And there's just a real mix, and there's something special with getting in the room with others that are working on bettering themselves for themselves and their family. So it was cool. And I
100%.
I just love what you're doing and I appreciate the heart behind it. What's the best way for people to reach out to you tomorrow and find out more?
You can absolutely go to my website at womengrowingwealth.com. And there is some information on the mentorship. The next cohort begins July 29th, where we will go through a 6-month cohort together as a community. And you can also get your enoughnumbernow.com. And when you do that, you will be able to go and to the calculator that I've created. And in 2 minutes, you can identify your enough number. Now, once you get it, a lot of times, man or woman will find, wow, I really want to dive into this more. I want to understand more. And then you can hop on a call and you can schedule a call with me if you want to do that from there at callwithtamar.com.
Okay. Awesome. Easy enough. And it's such a pleasure having you back on the show. And I also, if people have questions about my personal experience with Tamar, you're welcome to reach out to me. I love chatting and really advocating for folks out there that are really sharing important information like this that really can change lives. Tamara, appreciate it. I hope you have a great rest of your summer in the beautiful, is it sweltering, Austin, Texas?
It's sweltering and sticky and humid and glorious inside the air condition.
Okay, good. I've been in your backyard. I know you've got a pool to enjoy at least. So that's great. Thank you so much, Tamara. And guys, thank you so much for watching and listening, no matter where you're tuning in here. I really appreciate it. If you got meaning from this show or any other, I really appreciate you subscribing. And if you are so inclined, write that 5-star review. I appreciate it. Have a great day. Go and grow, and we'll catch you on the next episode.